And silver put in a 14-year high today of $38.47. And so I need to revisit a presentation that I made just a couple of weeks ago titled The Silver Slingshot. Now, I made this at the Investor Summit at Sea a little over 2 weeks ago. And in there, I start with gold, and I show where gold has gone, and I predict that silver is going to be making these moves very shortly. So let's analyze a little bit of gold. Now, gold had put in this pan and handle or cup and handle formation, and it had put in a triple top, and it was making an inverse head and shoulders when I first saw this. And what happened? I predicted that it was going to make a move like that. It was below $2,000. Now, I'm updating this a little. There's the pan and handle. This is a close-up of that area. But notice that the date is April 12th of 2024. So that's more than a year before I made this a presentation at the Investor Summit at Sea. So this was basically an update. Well, guess what? I've updated the Investor Summit at the Silver Slingshot presentation. So this is basically an update of an update. But when I made this presentation back in April of 2024, there was that pan and handle. It had just broken that, I was then actually updating a previous presentation where I said that we were going to much higher levels than $2,000. So it was at 2374 when I made this presentation. There was the triple top, and I said when it busts through this triple top, we have a slingshot move coming. There was the inverse head and shoulders predicting it, and you can draw a line right where that triple top was. You can draw a line across the neckline of the head. This is an inverse head and shoulders. Flip it upside down, and that's the predicted move. And so I took this. It actually happened much more steeply. This was actually copy-pasted from the last frame where I was predicting a move, and it happened very, very quickly. Well, then I updated this for Investor Summit at Sea. So this chart was made June 20 of 2025, and you can see what the move was. It hit $3,500 and then pulled back to $3,369 basically. I'm rounding. But it made a top. It hit $3,500. It bounced back. It's still below $3,500. It's bouncing around. It's noodling sideways. And everybody's saying, oh, I missed it. I don't want to buy at a high. The top is in, and I missed the entire move. Well, guess what? They said that there. They said that there. They said that there. And they said that there. The whole thing is taking a position and hanging on. I mean, in order to think that this is a top, you also have to think, well, then they're going to stop. If it's going to fall from here, they would have to stop creating currency. They'd have to stop typing new dollars into existence. Now, I want to point out the COVID crash. During COVID, remember that. This is March of 2020, that crash right there. And everybody thought the world was coming to an end. So let's go to silver. And there is the COVID crash. And I want to zoom up on the COVID crash here. Now, people thought the world was coming to an end, and so did I. I had already, by this time, I was following COVID in late January. And so all through February, I loaded up on things. I actually had, it really looked like this was going to kill a lot of people. Well, it was far exaggerated, and we know what the CDC and the NIH and Anthony Fauci did. But by the time March rolled around, I had enough supplies to close my front door. I lived in a penthouse in San Juan then, not up at my farm here. And beautiful. It looked like an art gallery, not like this, just plain. Right now, it's mission first, team second, individual third. So I've got a big mission that I'm trying to do, and decorating this place is like the lowest priority. So anyway, I wanted to buy gold with every fiber in my body. People were scared. I had enough supplies already to close my front door for 6 months and not open it, including enough oxygen to do a 2-liter flow 24/7 for an entire week. So I wouldn't have to go to a hospital. But Robert Kiyosaki used to say, true investors don't run from crisis, they run towards it. And when silver hit this low, the gold-silver ratio went up to over 123. It was just below 125 at the peak. And I didn't buy gold. I bought silver down at these prices. I didn't nail the 123 to 1 or 124 to 1, whatever it went to. But I did buy, and I added significantly to my position where the ratio was over 110 and another purchase over 100. And so let's get to silver now. You'll notice that there's the COVID crash, and there is the cup and handle, and there's the inverse head and shoulders. There is, multiple hits on trying to break through. So it's not the same triple top that you saw before, but you can consider that the neckline. And if you flip that upside down, it's the predicted move. Again, notice the date, April of 2024. But we ran into some resistance there. There was the previous peaks. And so this is the update that I did for Investor Summit at Sea of June 20, 2025 is this chart. And you can see the resistance that we had run into that sort of stopped the progression. And then when it finally busted through that resistance, we were at $36 then, but it ran into this resistance that was 13 years old. And that resistance was a 37.46 high and 36.89 close. The high was actually the day after the highest close. It closed 36.89. The next day it opened, and it bounced around and made a high of 37.46 and then closed down in the 34s actually on that day. But that was the resistance that we were running into. Now this is mostly technical analyst resistance. There's technical analysts looking at this, betting that it's going to hit this resistance and go down. And they're right. They cause themselves to be right. If there's enough people looking at this and trading off of it, it's a self-fulfilling prophecy. And so this caused it to do a little bit of a pullback. But when you actually look at the real resistance, the people that bought back then, that are waiting to get back to even, this was only 2 trading days. So it was nothing. It was bound to fail and fail quickly. And so it did today. This is July 11th, 2025, and there you have a close of 38.47, but an intraday high of 38.53. So this just blasted right through the previous resistance that you see here in the 37s, 37 to 37.20. Now let's take a look at a longer-term chart as of today. So we're at 38.47 close, and this is the previous high where it had run into resistance before, and we have cleared that significantly. I mean, we blasted right past it. So now we're at highs. Instead of 13 years, we're now at highs we haven't experienced for 14 years. But let's take a look at it. Let's do a close-up on this area right here. And so that's this chart. And what you see here, the main things that I want to point out, there's that high that caused us to stall in the 37s and then go up. And like I said, the highest intraday was the second, I can't remember the date, but the second one of those 2 little bars there. The first one was the highest close. But where we are today here, the reason I want to point this out is look at this. There's only about 3 months of trading that occurred at higher prices than this. And it's 14 years ago. So how many people are still sitting on silver that they bought at above these prices that are waiting to break even and are going to dump their silver? Very, very few, and most of those people are absolutely convinced that it's going to far higher prices than this, and so they're not going to sell anyway. So that means it's only the technical traders looking at this. It's 14-year-old weak resistance. And that means that when it does get to some of these peaks, we're going to see a little chop and a pullback and a little chop, but pretty much it is clear sailing to here from here. And I think that we are going to be seeing $48 silver. There's going to be a $10 move coming up very quickly here, I believe. Let's zoom in on this on the old chart. You can see the cup and handle, the 2011 peak. It was at 28.33 then. There was the cup and handle. There's the resistance. There's the inverse head and shoulders. I said I believe that we are headed up to these prices. Now, when it does hit the $48 to $50 level, you're going to see it probably be repelled, and it'll chop sideways a little bit. When it blasts through it, we're in clear air. And I've pointed this out many times before, and I believe that I was the very first person to notice this. This cup and handle is inside of a 50, it's from January of 1980, so it's a 45-year cup and handle. And this is predicting moves that are huge, and I'll get to those in a moment. But here's same cup and handle, and an attempt that I made to draw it on a trackpad. It's not easy. There's a little bit better cup and handle that fits it. Now, this is a snapshot of a page from the Kindle version of my book, The Great Gold and Silver Rush of the 21st Century. And in there, I said that silver was in a bubble in January of 1980. But because of the economic storm that is coming, because of the coming economic storm, which, by the way, we are in right now. It's happening. But because of the coming economic storm, I believe that they are destined for bubbles far greater this time around. So for fun, let's compute what the silver price would be if it went into the same type of bubble relative to the growth factor in the currency supply and other assets since 1980. The numbers below show where silver would be relative to its 1980 price, derived simply by multiplying the 1980 52.50 high. That was the intraday high on the Chicago Mercantile Exchange. The close was $50. By the percentage rise in these other categories since then to their most recent peaks in this decade. Now, some of them have gone to even higher peaks. This was all written back in the summer of 2022. So this is as of 3 years ago. The Consumer Price Index 3 years ago predicted that silver would have to be $200 an ounce, $200 per ounce. That was the prediction 3 years ago. Has there been inflation since? The single-family median price home, $468 per ounce silver if it had turned in the same percentage increases as single-family median price homes. The Wilshire 5000 stock index, this one will blow your mind, $2,178 silver per ounce, $21.78 per ounce. Now, that is not going to happen, but if it had grown by the same percentage as the Wilshire 5000. The 10-year Treasury bond, $1,059 as measured by the inverse of the yield. The U.S. GDP, $468, the same. So real estate has kept up with single-family homes. Silver went from $50 down to $4.30, and I've been buying it since those lows. From 1980 to 2002, I think it was, or 2003. and then started rising, and it has turned in spectacular performance this decade. Currency in circulation. So silver is measured in currency. How much currency have they printed? This is the paper currency in circulation. If it had kept up with the growth of currency in circulation, silver would have to be $971 an ounce. Now, I'm not saying it's going to $1,000 an ounce, but anything's possible. M2, $781 an ounce. M2 includes a bunch of bank credit. MZM, which they hid from us in February of 2021. They still collect the data. They just don't publish this. And that is $1,250 an ounce. Now, if you add all of these prices together and you divide them by the number of prices, you get the average. And the average is $921 per ounce. I'm not saying it's going there. What I'm saying is that $38 is still an absurdly low price. This is not the top, in my opinion. Now, let's take a look at the supply-demand. This is part of the update still. What you just saw was part of the presentation at Investor Summit at Sea. I inserted this just this evening. So, supply-demand. Between the black bars, you've got total supply, and then 2/3 the way down, total demand. You take the supply minus the demand, and you get the market balance. And for 5 years, there's been a deficit, minus 79 million ounces, minus basically, I'm going to round, 250 million ounces, minus 200 million ounces, minus 150 million ounces, minus 118 million ounces is the projection for 2025. But then you go down here, and there's the market balance less exchange-traded products. So people taking silver off the market in exchange-traded products. And instead of 5 years of deficits, you end up with 7 years of deficits. And it's far greater. So you've got minus 73 million ounces, 286 million ounces, 144, 132, 163, 210, and then it's estimating forecast of 187.6 for 2025. Boy, is this going to be wrong. This incorporates exchange-traded products, and as we speak, the silver slingshot has begun. And as it progresses, more and more people are going to rush into this, and that number will probably end up closer to 300 million ounces. What is when you've got a supply and demand issue, what puts them back into balance? Price. It's the only thing that puts them back into balance. We got 7 years here of deficit. It's got to go back into balance somehow. The only thing that resolves that is price, but there's going to be a huge overshoot. Price increases production, but this is coming out of mines that take years to get into production. And so as demand increases, price has to rise, and it has to rise far further than the natural supply-demand balance that would occur if silver could come to market instantly, but it can't. And so this is from April 17th. The Happy Hawaiian said, and it's been in videos before, how much silver exists in the ground compared to gold? Oh, there's roughly 19 ounces of silver for each ounce of gold in the Earth's crust. So how much silver do they mine each year compared to gold? Well, they mine about 7 ounces of silver for each ounce of gold that they mine. So how much silver is available in stockpiles? Well, of those 7 ounces of silver that they mine for each ounce of gold, we use most of it up. It's about 60% or more gets used up in electronics, in mirrors, in superconductors. It's used everywhere. It's the second most useful commodity known to man, the first being oil. So how much is available in stockpiles? Well, because we used up so much, there's about 3 ounces of silver available for each ounce of gold that exists above ground. So what's the price of gold compared to silver? 102 to 1. 102 ounces of silver to equal the value of 1 ounce of gold. That was in April. Today, this is at about, it's just below 88, I believe. So about 90. Okay, cool. So which one do you buy? Now, this chart is the average ratio of gold to silver ratio going back to 1687, and it's from an old article from goldsilver.com. And you can see during the pandemic, it hit 123.5 there. Now, when we made this chart, I had them this is all annual data. So we had to insert the day that in the spreadsheet that generates this, the day that silver was peaking at 123.5. But what they didn't do was insert the day where the gold-silver ratio bottomed in 2011, the most recent bottom there. This says 42. It actually bottomed down at 30. And so if you take that we're at about 90, and it's just absolutely, in my opinion, destined for below 30. I think that range where it's down at 20, we should put it in at least one of those. But if it doesn't, at 30, you're still, with silver, you're getting 3 times the performance of gold. So you could buy silver today and then swap it for gold when it hits 30, and you get 3 times more gold than you paid for. So we're going to take this back a lot further. The gold to silver ratio throughout history, 3200 BC, 3 to 1. 3 ounces of silver was equal to 1 ounce of gold. 9 to 1, 2 to 1, 10 to 1, 1000 BC, 12 to 1, 15 to 1, 15 to 1, 8 to 1 when Julius Caesar was alive, 13 to 1, 11 to 1, 8 to 1 in Italy in 1275, 15, 10, 5 to 1 in Japan in the year 1500, 14, 10, 12, 15, 15, and 105 to 1 in Clown World 2025. If you got anything from this, please consider supporting goldsilver.com. Make them your dealer. That's how I pay for this. I want to thank you for watching. We'll see you next time.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming. Young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation, silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.